if you look at anybody's reporting on the emerging markets, that's where all the GDP growth is. I think McKinsey's were projecting that 45% of the world's GDP would be in the emerging economies by 2020. And that's a huge shift. In most emerging economies, one of the big things that's changed is the movement of people from near poverty to what we'd see as middle class, sometimes in one generation. The institutions required to provide people with the investment and the financial products and the education that's required for businesses and people to be able to use those products, it's huge. The big change in China, of course, is that it's going from a development, an investment economy to a consumption economy. At least that's what they're trying to do. And you know, if you've got 600 million spending consumers of some kind, that's going to, if they succeed in that, that's going to signal a huge change. Many people, when they look at Asia, look at China and then look at the other big market, India. But of course, ASEAN, or Southeast Asia, is coming together fast. A lot of growth, a lot of people again coming into the middle class, a lot of people getting financial services, savings, pensions, that sort of thing for the first time. A lot of businesses that will now be able to export across borders without the same barriers that they've had in the past, and that's got to mean an increase in trade. Hong Kong remains a really sophisticated financial centre. If you are going into Asia and want a whole gamut of financial services and support, you can get it there from lawyers, accountants and highly sophisticated insurance industry, which is still helping to underwrite and reinsure massive economic development and infrastructure projects in China and the region beyond. We're seeing Japanese companies, including financial services companies, showing a lot more ambition in the region. I think a couple of years ago that would have been driven by the remarkable strength of the yen. Now it's probably sustained more by the huge cash reserves that Japanese companies and financial services companies have, that they need to deploy those to get a proper return. But overall, I think it's to do with the ambition of the country. Japan is back. They do want to project. They do want to reclaim their spot as one of the world's thriving global economies.